Welcome to this case study class. My name's Kieran Doe. I'm a senior tutor at ACA Masters. When I sat the case study exam myself, I won the ICAEW prize for the highest score in the world. Several of my students have also won the ICAEW prize for the highest score in the world, whilst many others have won regional prizes. This class is taken from my July 2025 RYC case study video course. Full details for the course can be found on the case study page of the ACA Masters website under the video course section. During the course, I will also be referring to the mock exam that we've produced. We'll be producing 3 mock exams for RYC, so this is mock exam 1, and we'll be working through requirement 1. All of our mock exams come with mind model answers, so you can see exactly what you need to produce in order to score a prize winning mark. And you can see how the points I make translate onto the marking key, which is written up in exactly the same style as the ICAEW marking keys. I will also be referring to my AI analysis document, which summarizes all the main points from the advanced information so that you can quickly refer to them in the exam, as well as the analysis of the numbers. And I'll also be referring to my pro forma report, which is specifically designed for you to bring into the exam for you to use on exam day. So you've already got your report structure and you know which points to make under each section, and therefore you can just flex this on exam day based on what comes up in the exam. So full details for the video course and also our mock exams and the AI analysis document and the pro forma report can all be found on the case study page of the ACA Masters website. So we'll take it one requirement at a time. So starting with requirement 1. So we can see here that we'd get the email as we would expect. And then we've been told there's been some significant developments. And then we've told here about the different exhibits, and as we'd expect we get the pre-populated spreadsheets, but we can see here we've got the information for the management accounts and there's a request for advice, and then we've got the management accounts, but that will come in a pre-populated spreadsheet form, and then we've got a reference to the exhibits for requirements 2 and 3. So we're told here to draft a report from me, so that's from Hayley Joseph, to the directors. This should comprise the following. So we've got an analysis and explanation of RYC's financial and operating performance for the year compared with the previous year. So exactly as we would expect in requirement 1. So we're told that we should cover, and it's very important to focus on exactly what we have been asked to do. So we're told to focus on revenue, and for each garage, each work type, and in total. Now, even if it did just say revenue, we would still, of course, look at it by garage and probably have some comments on work type as well. So then we've got cost of sales, again for each garage, each category, each cost category, and in total. And then we've got gross profit, and again, by garage and in total. And then we've got admin expenses and operating profit. So therefore we know the sections that we're going to have in our report. So in our report pro forma, of course, we know which sections we're going to have, revenue, and we've kind of got an idea of how we'd structure it, cost of sales and gross profit, admin and operating profit. We're not asked to analyze cash, for example. There doesn't appear to be any ethics. In the exam, it might be that we're not asked for admin expenses and operating profit, and therefore you wouldn't have a section on those. So absolutely crucial that you make sure you focus on exactly what you have been asked for, and don't try to answer a requirement that you hoped had come up or had come up in a previous exam. So focus very carefully on the requirement wording, and then we'll use this to structure our report. So we're told to use the management accounts and the supplementary data on the R1 accounts tab in the pre-populated spreadsheet. So we'll have the pre-populated spreadsheet in the exam, and then on the R1 accounts tab, you can see as well we're told about the accounts and then supplementary data as well. So we could get the KPIs down here, so make sure you look out for that. So we've got the accounts in a pre-populated spreadsheet, and then we're told incorporate as appropriate the additional information in Exhibit 15. So we would expect to have some narrative, as we've seen before in the previous exam, some narrative around what's happened in the year. So we'll use this as reasons why certain items have moved. And then we've got a request for advice as well. So we've got the request for advice here. So I would quickly have a think about what the marking key would look like. So we know the boxes on the left-hand side and the right-hand side will be the same. So it's really these middle boxes. Now, if we've got a request for advice, then assume that that will take up these bottom two boxes. So therefore, that only leaves these four boxes here for revenue and gross profit and operating profit. Now, there isn't as much to say on profit, gross profit and operating profit as there is for revenue. Certainly not on operating profit. There isn't as much. I think it's about 4 lines. So possibly they could give you some more detail around those. But if we need to squash this all into 4 boxes, then assume that revenue would have 2 and probably include the KPIs in there. Quite a few of them are linked to revenue in some way. And then we've got, of course, gross profit and operating profit. But, as I've said before, it wouldn't matter if this was slightly different. Maybe the request for advice is small and it's only got 1 box, or possibly it's sharing with operating profit, for example, and then there's a bit more on gross profit. As long as you've answered every section that you've been asked to, then you'll score really well. We can't obviously predict a marking key entirely, but I think it's just worth having a little think at the start, what do I think the marking key will look like? Because that will help kind of guide you as to how much to write for each section. So, like I said, looking at this, I would assume revenue's got 2 boxes, and therefore gross profit and operating profit are effectively merged together, and we might end up with a few kind of ors here for different cost lines. But like I said, even if it was a bit different and your operating profits merged with the request for advice and there's a bit more on gross profit, we're still going to answer every section, so we would still score really well in the exam, because we're just answering exactly what the examiner has asked us for. So we've obviously got the pre-populated spreadsheet with the accounts, and we'll be reminded about this in the exam because it does reference Exhibit 16, but obviously that's in the pre-populated spreadsheet. And then we've got the reasons here as to why certain items have gone up or down. So as I've explained previously, there's an element of preference here as to what you like to do first, whether you like to kind of get on with the numbers first of all, and obviously you're well rehearsed on the management accounts and you've thought about the layout for this, having undertaken the AI analysis. So you might like to get straight on with the numbers, or you might like to read the narrative first of all. Personally, I like to just read the narrative to see kind of, what's happened in the year. And then as I go through the numbers, I'll probably be thinking, oh, well, that links with that and that makes sense because of this, etc. I'd probably leave the request for advice for now. That's generally like an isolated request, and tends not to have an impact, but we might have a high level look at kind of what's happened there. Tends not to have a significant impact on our main body of the analysis, but we can always have a look just to be sure about that. So we've got the note from Head of Finance. So we're told about total number of visits across all garages in the year was this. So we've got the total there for visits. Now that looks slightly lower than the previous year. So of course, when we analyze overall revenue, we can look at, is it due to price or is it due to volume change? And it's obviously volume, and then the effective price is average revenue per visit. So we're looking at that in overall revenue. We'll be including that here. I've already thought about where we might include that here. Number of visits, great to have that. So we're told on the 1st of January, so halfway through the accounting year, implemented price increases at all garages. So, that would be a reason why average revenue per visit has gone up, for example, or possibly why profit margins may have gone up if there hasn't been a cost increase as well. Although we are then told on the same date, 2 of our largest suppliers also increased their prices. So, we've got a reason here as to why average revenue per visit may have gone up, and also down in cost of sales. When we think about cost of parts, we've got a reason here as to why that's gone up. So you may start to scribble these on as you go. We've got a reason here why parts have gone up. Like I said, we've already got the number of visits, and we've kind of got a reason here why average revenue per visit may have gone up, so we can kind of integrate that into our answer. Remember, as discussed in the earlier classes, always try to use the exam paper information as much as possible. So every time I'm reading a point, I'm thinking, where can I use this in my answer? So we're told that the certified MOT tester at Camberley left unexpectedly in August 24, so quite close to the start of the year. And it took several weeks for a more junior staff member to complete the training and obtain the necessary certification. During that time, we were unable to perform MOT tests at Camberley. So that would be a reason why MOT revenue at Camberley's gone down. So again, probably go to my planned Camberley section and, note that down. Probably be looking to see, I'd expect to see MOT gone down, and probably other revenue as well, because we were told, of course, MOT work and service work leads to other work like repairs, and probably also other areas as well, like tyres, you would have thought. So we're told, whilst we tried to redirect customers to our Woking garage, we expect that the majority went to other garages, so therefore rivals. So therefore the business was lost. It's what the expectation is there. So these will be reasons why for Camberley. So I'd expect to see that have gone down. So then we've got revenue from EV work amounted to this. So that's definitely an increase. Gross profit, we can look at the margin. But importantly, of course, that key metric, is it at the 15% target? So good to have got that information. And then we're told in April, a few months before the year end, main glass supplier significantly increased the minimum purchase thresholds for each discount tier. So we're told that they've been able to obtain more discounts as RYC gets larger and purchases more, but they've increased the minimum purchase thresholds for each discount tier. This has resulted us in receiving lower discounts on purchases, i.e. higher price. So that's glass suppliers. We had 2 issues with suppliers, one increasing prices and two increasing prices, and another effectively increasing prices by reducing the discount. So then we're told all staff given a 2% pay rise. So that will be by staff costs have gone up. As planned, paid a bonus to each garage at reported utilisation of 85% or higher. So therefore we can see which ones did. On the 16th of July 24, so again at the start of the year, we recruited a digital marketing specialist at the head office team. So that would therefore be a reason why head office staff have gone up, and then we can look at staff costs in total as well, so we can do some analysis there. So this is going to be useful. So again, you could start putting on the points here. We've got a reason here, why labour costs would have gone up by 2%. If they've gone up by more than that in some garages, and presumably that's because of the bonus as well. So we can think about which ones have met the bonus. This obviously goes into personnel costs down in admin expenses. So as I said before, we might not comment on every single cost, but we'll definitely focus on ones where there's a reason from the exam paper or ones which have had a significant increase. So like I said, we could then kind of get onto the numbers, or you could have a quick look at the request for advice, but I would, leave this and come back to it. If you had a high level look, you could see, there's an issue at the Woking garage about fake parts, essentially. So, you could possibly mention some of those points if Woking had a negative performance, had a poor performance. But as in all recent case study exams, this is kind of like been isolated in terms of, you could do the main body of the analysis and then do this as a kind of separate, discrete matter. But, there's no hard rule that there couldn't be something in there that could impact your analysis here. So you may decide to have a high level look if you wish. So then once you've kind of got an idea of what's happened, we expect to see a decline at Camberley. It looks like visits have gone down, as we've said. We know they were going to close in EV. We'd expect to see parts go up. We'd expect to see some changes around, labour as well, and personnel costs. So then you can do your appendix. So obviously starting with the pre-populated spreadsheet, and as you look down, you can kind of see what type of performance has it been in the year. So we can see here that we've got, it's been quite a good year. Revenue has gone up. It's more than the 2.2%, but obviously it's less than the target or the industry growth, 2.2%, but it's actually lower than the previous year. So we'd obviously mention that. That's in our pro forma report. Revenue's gone up by more than cost of sales. So that means gross profit margin will have improved. That's obviously positive. But admin expenses have gone up by more than revenue. So operating margin will go down. And we can see there's actually, despite the increase in revenue, there's only been a small change in operating profit. I wouldn't expect that we'd need to analyse any further than that. We can look at net finance income is slightly higher. Most certainly won't have to analyse tax. You could have a quick look at the SFP, but it's hard to see. There'll be some additions and then some depreciation. Cash looks healthy. That's the main point really around that. Obviously is affected by working capital changes, and then this obviously won't change, and then retained earnings is just the accumulated profits which weren't paid out. So we're not focusing on cash. It looks healthy. There isn't really much to see there. So then we get down, and we're obviously, as we'd expect, we're given the 25 figures, the 24 figures again, and they've already calculated mix by garage for us, which could be useful in our analysis. And then we've got obviously cost of sales, and you can see this is in the same format as the AI as we would expect. The only kind of real difference is we've got the supplementary data down here as well, the KPIs, so make sure that you pick up on those. Obviously, as we did with the AI, we want to do like an analysis by garage. So therefore, there's different ways you could go about doing this. But if you kind of add in some rows and then have it, by garage as well, is the way I would personally go about it, because then you can see for each garage the change, and then also we can do some further analysis to identify what has caused that change in Guildford. Is it because repairs have gone up particularly well? Camberley, for example, we can see it has had a poor year, it's gone down. Why is that? As we would expect, because of MOT. So discussed all this, of course, in the AI analysis class. So then as you're kind of going through and doing the numbers, I try to kind of think at the same time, what's happened here. Obviously in the build up, to the exam, there's probably a lot of speculation going on. in your own mind, if nothing else, about, will they have a good year? Will they have a bad year? Will this garage do well? Will this garage not do as well? So it's quite nice when you get to exam day and you see, oh, what's actually happened with RYC. So you can see here, Guildford definitely had a good year. Growth fairly even across all of it, really. Camberley has gone down, and what's the reasons for that? Well, tyres have actually gone down quite significantly, and that, of course, had happened in the AI because of the mobile repair business. We can mention that still seems to be an issue. But then, of course, MOT down. We've got the reason for that from the exam paper. Woking has had a surprisingly poor year. And yes, we do know in the request for advice there is something there, so you could possibly mention that. But then, we've got Dorking, that's had a better year, not the best, but still a good year. Although interestingly, windows have gone down, but it's not that significant. Red Hill, again, the strongest performer here. Growth across all areas, not so much on windows, but it has still performed well there. And then overall, this is kind of a good sense check. You've got your overall figures there, and then you can obviously look at that by work type, and actually windows has been the best performing there. Obviously MOT adversely affected because of the decline at Camberley. And perhaps you could even look at, if it wasn't for that, would that perhaps be the best performing? You could do this. There's a lot of analysis you can do by mix. So you could look at each garage. Each garage is mixed by work type, and we were told that kind of varies in the AI. You could also look at see work type by garage, and then see, as we were told in the AI, for example, Guildford, nearly 60% of windows, and that's now over 60% of windows. It's Windows revenues obviously growing more than the others, and that's obviously because of the specialist glazer. So that's some useful analysis that you could do there. But if you do struggle with time doing this, some of the mix calculations are probably what you can miss out. I think looking at definitely by each garage, and then maybe having some type of mix calculation, whether that's by work type overall for overall revenue, or looking at it kind of by individual garage, or possibly kind of overall like this. But that's something you could reduce if you do struggle with time. What's important is you get onto the analysis and including it in your report, rather than doing lots and lots of calculations. We only really need to calculate what we're going to bring in to the report. So then, like we saw, we were given the KPIs as part of this supplementary data, which is kind of how they did it in the reworking of the 2024 mock exam. So probably likely that we would see that there. And then you can obviously compare it to the previous year. But again, look to see what's happened here. We can see that Camberley, which was actually the best on KPI1 no longer is. Guildford is, we can comment on that. That's had the biggest improvement, perhaps because of the price increase. KPI2, so looking at utilisation, Camberley's continue to decline. Red Hill still the best. Woking's actually gone down as well, but the others have gone up. And then KPI3, Woking has dropped below the acceptable 8. Camberley continues to decline. Red Hill, the best there again. And then we've got the number of visitors, the quick calculation there. So actually that has declined. So number of visitors down, but actually average revenue per visit up. So effectively a price increase, but a volume decrease. Could do a bit more analysis on the KPIs as we did there, because we can see the number of visitors, that's the decline there. But also with KPI2, the utilisation. If you actually look at the staff numbers, you could actually work out what available labour hours are, if you obviously strip out the head office staff. And then you've obviously got the 37.5 and the 48, so hours per week, a number of weeks. So therefore, if you've got the labour hours and we know the utilisation, you can obviously work backwards to get the hours worked on customers' jobs. if you've got any two of these numbers, you can obviously work out the other one. I don't think it's particularly interesting here, but just something to bear in mind. Obviously, EV, it's important to look at. Is it 15% of revenue? No, it's not, but it has grown, which is positive. And of course, if you've got the gross profit as well, we can look at the margin, which we'll bring into our gross profit analysis. And so that's the analysis I would undertake there on revenue. There is quite a lot, as we discussed in the AI analysis class. If you struggle with this, then reduce some of the mixed calculations. Definitely analyze the KPI. Definitely analyze it by garage. And I think kind of doing the mixed calculations or looking at it by work type per garage will probably give you some of the reasons why there's been a movement in the garage. Why has Camberley gone down? Actually, you can see it's really because of MOT and service, which has a knock-on impact on repairs and the continuing issue with the tyres. So that analysis could give you the reasons why certain garages have moved. And then, KPIs, absolutely essential to analyze those, and your number of visits as well, because I think that kind of gives us the underlying reason for the growth overall. So once we have done our analysis of the numbers, of course, we know what our sections are going to be. We'll have one on overall revenue and then one on each garage. So obviously the five garages, and then I'd probably try to have a comment in there on mix as well. So there is a lot to do because there are 5 garages, so I tried to cover them all. Obviously, once you get into the habit of the writing style, which you obviously will do, having practiced the marks, you do get a lot quicker at it, and it does become a bit repetitive. So we know the structure is the one you're focusing on. Mention the number, give some sort of opinion. Impressively, disappointingly, surprisingly, modestly, etc. So give some opinion with the increase or the decrease, with the number, and then we get the reason. So it's, number with the reason, ideally from the exam paper, narrative, or from some analysis of the pre-populated spreadsheet. And then try and do some further analysis as well, maybe comparing the different garages, etc. So we do that for each of them. You could mention a context point as well if there is one for that garage. So we do that, number, reason, further insight point, maybe a context point. And we just do that for all of the garages. So we're just kind of going through, number, and there'd probably be kind of a reason in here maybe, or possibly in here, further insight point, possibly in here, and then maybe a context point as well. So it's not a strict rule that, numbers are in here, reasons are in here, and your further insight points are kind of in here as well, or number and reasons in here and further insight points in here. They do move around a bit, but if you undertake a good analysis like that, then you'll get plenty of marks. We've got some ideas on the pro forma report that you'll obviously have in the exam with you, that will be useful to kind of remind you of the types of things to focus on. So, of course, just remember from the technique classes, we discussed that the approach for overall revenue is slightly different because obviously, Guildford, number with the reason. So we're focusing on each individual branch there, each individual garage there. Whereas here, of course, we're looking at kind of overall. So we're going to look at some of the KPIs, etc. So we'll have overall increased impressively. It's quite impressive growth. So I mentioned the number, the absolute, the percentage, and then for key headline numbers like overall revenue or overall gross profit or overall operating profit, I like to just mention the 2025 figure. I mean, strictly speaking, you don't need to. So if you struggle with time, you don't actually need to have that in there. But I just feel like, when you look at company reports, etc., then they do have the kind of 25 figure in there. That's kind of a key headline number. So we've got the number, and then comment on, is it above or below the industry growth figure, the forecast industry growth, which it is. It's obviously above it. And then mention the point that the rate of growth is decreasing. I've just kind of couched that in some context, like weak economy, higher cost of living, fewer collisions, all of that would probably have like a negative impact. So I've said, despite all of these negative contextual factors, the fact that the rate of growth decreasing, might be expected. Although you could also kind of play that the other way and say, potholes and people having cars for longer, that should have a positive impact. What I'm trying to do there really is just trying to get some of these points and just making sure that, kind of framing those points in the context of what's happened in the year. So then we can get on to, is it due to an increase in volume or price? Well, the increase is due to an increase effectively in the prices the company's charging. Average revenue per visit, that's gone up, and I've got the prior year comparative there. So that's gone up, which is probably due to the price rise, but also, possibly a change in work mix. But that's offsetting a decrease in the number of visits. So any company's revenue essentially can be analyzed between, is it due to an increase in volume, so are they selling more, or is it an increase in price, or decrease in volume and a decrease in price? What's happened here is effectively an increase in price, or what they're earning from each visit, but that's actually offset by a decrease in the number of visits. And then of course we've got the context for average revenue per visit. We know what the typical range is, from the AI. So that's kind of KPI 1, KPI 2. Utilization has increased slightly. Probably should have added slightly there. Increased slightly. And that's increasing the job hours because a number of full-time employees and therefore total hours has stayed the same. So that's due to staff to more job hours. And we could pick that up because we saw the number of full-time employees had stayed the same, so a bit of analysis there. And that's still above the acceptable 75%. Just like I did for KPI 1, just comparing that to like the industry average or what's considered acceptable. And then KPI 3 is actually decreased, and that's concerning because that's got a very important metric, but it is still above 8, which is considered good. So these are all like the KPIs overall. We might mention some of the KPIs, by individual garage when we do our analysis by garage. And then EV revenue kind of applies overall. So I've said how much it's increased by. It's now this amount of revenue, but it's still below the target. But we can say that they're gradually capitalizing on the strong EV take-up. So that's kind of a good kind of context point there, that strong EV take-up. And then you could have kind of like an overall comment. You could sit back and look at the numbers and think, has revenue from all garages gone up, or from all work types? Well, we know it hasn't gone up for all garages. 2 of them had a decline, but actually revenue from all of the work types has gone up. So then we can come on and analyze it by garage. So we can see here, take Guildford for example, the exam technique is number, reason, further insight point, context point, and we just do that for each of them. So Guildford, up impressively by this number, with the reason. Why has it gone up? Because there has been an increase in revenue of all work types. So we weren't given a reason on the exam paper. Guildford revenue's gone up because they competitor closed down, or whatever it may be. I actually identified this reason by having undertaken some more analysis on the numbers, and we can see there's been an increase in all work types. You wouldn't say, you could say, primarily due to repairs. You could possibly say that, but they're all broadly the same. They've all contributed to this growth. And then there's been an increase in average revenue per visit, due to the price rise. There's also been an increase in utilization, which, would be good for revenue as well. And then some comparison between them is like the further insight points. So these are my reasons, an increase in work type, an increase in price, and an increase in utilization. So a few different reasons there I picked up from my analysis, but then tried to do some comparison between them as well. So which one is like the fastest growing, or which one is the slowest growing, which one has the best KPIs. So Guildford actually has the highest KPI 1. And another further insight point would be to maybe look at something on mix, but I noticed that the windows work has continued to increase because of the full-time glazer. So you can kind of see, what we're doing here is, Guildford, got the number, the reason might be in here as well. And then, there might be some further analysis points in here. You know, Guildford being the best, you know, that was the further analysis point. So I've kind of got that in there. And then there might be a context point in here as well. You know, it could have been something about the glazer in there, but there wasn't. So yeah, you can make a good point, but if it isn't on the marking key, don't get the mark. That's just the way it works. So in Camberley, same thing. Obviously, this is decreased disappointingly. So that's the opinion there. You know, number, nice, easy mark. Reason from the exam paper, the MOT tester left, and that caused a decline in MOT and service and also repairs work, presumably. And then there's also tyres, which are continuing to decline because of the mobile mechanic, presumably. You know, we knew from the AI, of course, that, you know, for Camberley, we knew that the mobile tyre competitor had set up. And then if we look at the KPIs there, you know, utilizations continue to decrease and it's still below 75%. And customer satisfaction is decreased and it's still below 8. So Camberley's performing really badly and it's a worse performing garage. So you can see again that number with the reason, nice and easy. We were told, you know, the MOT tester left, MOT revenue's gone down. You know, further analysis, you know, maybe a bit of the KPIs or just saying it's the worst performing garage. Again, you know, when you've kind of gone through and you're doing, you know, the analysis, you know, you'd see some of that. You come in at Camberley's continue to decrease. So you can kind of see, yeah, there's a lot of rich analysis you can do by garage. And then we'll just go through them all in exactly the same way. So, you know, Camberley, here we are. Here's the number, reason, with the MOT tester left, wasn't on there, which, oh, here we are. So yeah, MOT and service decline at Camberley. So we've kind of got that point there. And then like the further insight point, you know, Camberley, yeah, one of the worst. Again, you mentioned 2 KPIs, so I've kind of got these marks. So you can kind of see here, you know, number, you know, some of the reasons and the further insight points there. And then I've kind of gone through the others and done the same. You know, Woking is not, it's decreased, you know, surprisingly, probably didn't expect that. And then again, looking at it, it's all work types where it's gone down and utilization's gone down. Customer satisfaction is now below 8, which is obviously concerning. A KPI 1 is still the lowest, you know, which might be due to the QS work, as we kind of picked out before. Yeah, it could be lower revenue and profit than other work on average. Obviously, there's the volume benefits there. So then we've got Dorking, you know, increased modestly, increase in all work types except windows. So, you know, I wasn't given a reason there for Dorking or, I think Woking, there is something in the exam, in the request for advice. We could have possibly brought that in there, but you could just kind of look at your own analysis as the reasons why, you know, which work types went up or down. And again, you can do that analysis there, and then we can obviously look at the KPIs. You know, have they gone up or down, and is one like the best or the worst? So again, same here, analysis there for Woking and Dorking. And again here, you know, every time you're doing this, we're just getting the mark here for the number. You know, we got the reason there. You know, here's another point here. So probably not as much to say for, you know, these two, as we said. So Red Hill increased impressively. An increase in all work types, an increase in average revenue per visit, an increase in utilization and customer satisfaction. So it's the fastest growing and the highest KPI 2 and 3. So, you know, when you compare it there, it really is the best performing there. So we get the mark here for Red Hill. You know, some of the other points as well, you know, it could be backslash, you know, Red Hill continues to be the best. Unfortunately, that's backslash with saying, you know, Camberley's worrying performance, or, you know, below 75% on KPI 2. Again, that's just how it goes. At Woking, I said, you know, it's below 8. Again, it's backslashed here. You know, there's only one mark for it. It's just the way it goes. You know, we don't know exactly what the marking key will look like, of course. But you could almost think of that as a fallback. Yes, you might get a few extra points, but better to have them and not have them. And then commented on mix. So given the numbers, how much they've all changed, and then what does this show? So I think we were actually given this, which was quite nice. You might get some of the mixed figures given to you, but we can see Guildford continues to increase. Redhill significantly, and an interesting point here is Redhill is now larger than Camberley, so it's now the second largest. So you can mention how much they've changed for shows the continued importance of Guildford, and that's obviously the largest and the oldest one, the increasing importance of Redhill, and is now overtaken Camberley to become the second largest. So you can see here, get some points here about mix. And then all of the other points were the overall section I did for revenue, so overall revenue, and then compared the growth. And again, I've kind of got all of these points, so it is a bit unfortunate, but I've been really thorough here. So even if you do struggle a bit for time, you don't get as much done on mix, you can kind of see how actually you'll probably hit a few backslashes anyway. So you can still get full marks even if you don't get everything. You can obviously mention like the EV up there. But yeah, a lot of the points I've got were backslash. And that's, they've got quite a lot of points you could potentially make for revenue. So if it's only 2 boxes, but there would possibility maybe that the KPIs could be in a different box and therefore there'd be less backslash. So you don't know exactly how it would be. So try to do the most comprehensive and thorough analysis that you can do, which is what I've done here. This is really comprehensive and thorough, and I've used the exam paper information as much as possible. I've gone through all of the garages as I've been asked to. I've woven in the KPIs points here as well. I've compared the garages as well in my further insight points. So really kind of following that structure, but adapting it to exactly what has gone on in the exam on exam day. And you can see how that results there in plenty of marks across all of the different garages, and you've got mix there as well. And you can see just by going through each one how we just pick up marks each time. And of course, some of my context points, which I've predominantly mentioned in my overall revenue section, like the industry growth, strong EV take up, etc. You can see here, the weak economy, you can see that they're picking up the marks here in the context box. These are the type of points we'd expect to see there. So they have all actually come under the revenue section, but there might be some different points in there. We don't know exactly what the marking key would look like, but these are quite a few of the points to have mentioned. So you can see really thorough revenue section, and therefore picked up plenty of marks. But we don't want to overdo revenue. You can see here that isn't enough to pass the requirement. You need to make sure you leave enough time to get on to your profit analysis. And then we also want to get some of the easier marks on a request for advice, and then nice and easy on conclusions and recommendations. So we want to make sure we attempt everything. So quite often feel like perhaps the biggest difficulty almost with revenue is making sure you stick to time on it, and that you leave sufficient time to do your cost of sales and gross profit section and the request for advice. There's some of those points on revenue that were relatively difficult. So we don't want to spend too much time trying to calculate mix every which way possible we can. If we can't do that within the time, better to do slightly less and making sure you get sufficient analysis so you pick up all of the points, get through all of the garages, etc. But you get more and more practice with the mock exams, and you'll start to get a feel for when you need to move on to make sure you've got enough time to do the full analysis of the garage, of all the garages, etc. So then we can come on and do analysis of cost of sales. Of course, gross profit by garage, you would need to calculate. We've got cost of sales by garage and category. But again, to get the year-on-year changes by garage, you just have to calculate that yourself, insert some rows, and just rearrange the layout like this. I think it probably is useful to have it by garage, just because with labour costs, for example, you can then calculate average labour cost per garage. And we were told some specifics here about somebody leaving at Camberley, so maybe that has an impact there. But you possibly could do it some simplified ways, possibly just looking at overall maybe labour. But then again, if one's had a significant change, you'd ideally want to pick that out. But we can see here, most of them have broadly moved in line with revenue at that garage. Interestingly, overall, certainly need to look at this, but we can see purchases of parts has gone up. That's more than the increase in revenue. So that will kind of have a negative impact on margin, but actually labour is up less than revenue, so that would have a positive impact there. And you can look at that as a percentage of revenue. Parts now accounts for a slightly larger share of revenue, labour less, and other the same. So then you can effectively work out what the profit margin is. Obviously, it would be 27%, so kind of like sense check there, because of 100% of revenue, this percentage is going on to each cost, and that in total, and therefore that gives a profit margin. Obviously, you need the cost of sales by garage, then work out gross profit by garage, and then, as I said, labour costs, average labour costs, a key metric to look at there. So really, for cost of sales, the technique is essentially the same as we just did for revenue. So, which costs are we focusing on here? Parts has gone up by this amount. Reason from the exam paper: suppliers increasing prices and reducing discounts. And then further insight point: what percentage of revenue. So, nice and easy, we're doing it in the same way. Parts has gone up by this, suppliers increased prices, labour will do it the same. Labour's gone up by this. What's the reason? Ideally from the exam paper, due to pay rises. It's now this percentage of revenue, further analysis we've done. But then there's a bit more interesting work we can do here, because we've got average labour costs have gone up. So why have average labour costs gone up? Well, we actually know there's been a bonus in there as well. So we need to think about these different factors. And if we look at average labour costs, they've gone up 1.9%. They've actually gone down at Camberley. Now, we were told, of course, they lost their MOT test, and a more junior staff member, did the work. So maybe that was a more senior member of staff. And if you do some analysis as well on the staff numbers, we saw overall they hadn't changed. There's one more head office staff, but actually, Camberley lost a staff member that we were told about, and Redhill gained one. So that will have an impact as well on our average labour cost metrics. So this is obviously average labour cost. So if we look at Camberley, for example, your labour costs have gone down. Presumably that's the staff member which left. So therefore, actually, average has gone down. Presumably the person that was left was more senior than the average, and therefore average labour costs have gone down there. Woking and Dorking, not much to see here. We were told about a 2% pay rise, and obviously they've changed by 2%. So that's just seems as though everybody there has had an inflation-based pay rise. Whereas at Guildford and Reading, it's gone up by more. But of course, we know that their utilisation was high. So we can see here Guildford just above the 85%, Redhill way above it. So of course, they would have got the bonus there. So we can see Guildford, they've obviously had the pay rise, but also the 10k bonus in the labour costs as well. Redhill's gone up by more, but they've got a new staff member and the 10k bonus. So that explains why these two, the average labour costs, have gone up by more, and labour costs overall have gone up by more here at these two because they have paid the bonus, and Redhill's also got an additional staff member as well. So definitely some interesting analysis, further analysis to do there. Obviously, the nice easy bit is your labour has gone up by this number, reason from the exam paper because of the pay rises, percentage of revenue, quite easy. But then you look at the average labour costs, that's overall. But actually, if you look at it by garage, where we can do some interesting analysis, all garage except Camberley have gone up. They lost an experienced staff member, but because they Guildford and Redhill had the largest increase because of the bonus, because utilisation was 85%. So therefore, we can see here, labour has gone up by this. And then again, a few points there that I've mentioned, backslash, but they could have been separate. And that is some good analysis we can do there. Other costs, there's not really much to say there unless we're given a reason from the exam paper. And that's backslashed here as well. So as I've mentioned before, if you're struggling with time and you feel like, I need to reduce some points, reduce the ones where the movement isn't that significant because it's still the same percentage of revenue. It's not a big cost overall, and there's no reason from the exam paper as to why it's gone up or down. So really, there isn't much to say about it. Focus on the ones which have had the most significant movement, the ones which are the larger costs in total, in absolute terms. So the ones which are the biggest in total, they've had the most significant change. There's interesting analysis we can do on it, or reason from the exam paper. Others very boring. There isn't really much to say there at all. So focus on those ones. If you're running out of time, then drop that. And gross profit, though, absolutely, we need to do some detailed analysis here. We saw the gross profit margins improve. That's back up to the 27% level. So we'll comment on that. But we can do the analysis by each garage as well. You can see the changes. Some of that's just a product of the revenue growth. Obviously, Guildford and Redhill had good revenue growth. But if we look at the margins, we can see Guildford's had a significant improvement. Camberley a decline. Redhill still the best. The other two, not quite as much really to say there. That's been a general theme in this exam. So profit margins improved, which is definitely, impressive. We mentioned gross profit in absolute terms. So absolute gross profit is up by this to this. Again, a headline figure. So I like personally to mention the 25 figure. Gross profit margin is up to 27% from 26.6. Why is that? Why has gross profit margin improved? Now, we discussed this in the AI analysis class. There's lots of reasons why it may have gone up or down, and we thought about this in detail and discussed this in detail in the AI analysis class. And in this particular case, labour's decreased as a percentage of revenue. Out of those costs, it was labour that decreases a percentage of revenue, so that's having a positive impact on the margin. Think about the impact of revenue mix, because we know Redhill now accounts for a larger share of revenue, and Redhill is higher margin. So if they're getting more of their revenue from the higher margin garage, then that's going to increase overall margin. So revenue mix shifting towards a higher margin garage and away from the lower margin garage, which is Camberley. So Redhill's got the highest margin. Camberley's got the lowest margin, so it's good that revenue is moving more towards revenue from a gross profit perspective. Whether that's good overall for the business in terms of capacity and utilization, etc., it is a different matter, but certainly purely in gross profit terms, it is. We know that EV work is high margin, and we can calculate the margin as we did because we were given the gross profit as well as the revenue. So not only has the margin increased on EV work, actually more work is from EV because revenue for EV work has gone up more than overall revenue. So the margin from EV work has gone up, which improves margin, and it now accounts for a larger share. Utilization has gone up as well, which will be good for profit margin. Staff will be being paid the same, but they're now doing more work. There's obviously the price increase as well. You could have mentioned that. There's been gross profit margin increases at individual garages, at 3 of the individual garages. We can mention that. So there's lots of reasons here why gross profit margin has improved. So you can do that. Look at it by garage. Look at revenue mix. By garage. Look at EV work as well. Has that changed? It would all give you reasons as to why gross profit margin has changed, and it's now reversed this downward trend, which is pleasing. And then you could comment on, as we did with revenue, say which one is the best and which one is the worst out of the garage. Red Hill continues to have the highest, Camberley continues to have the lowest. So, we'd hope that we'd get quite a few points for that. Gross profit, the margin. But again, some of it might be backslashed here, but I've mentioned most of those points. And then like with overall revenue, you can have an overall comment of cost of sales. But again, we're not going into the individual reasons here. I'm not going to say cost of sales has gone up because parts went up by X% and labour went up by X%, because I'm going to cover those individual costs here. So I have some overall high level comment, such as all costs have gone up, or costs have gone up less than revenue. Like I did with overall revenue, and it's overall revenue has gone up because Guildford had an increase of 11.8%, which offset the decline at Camberley, but Red Hill went up. I'm going into those individual garages here. So these are high level comments. So just like the overall figure, and then, comparing the change and, with the costs as a percentage of revenue, comparing it to the previous years, etc. So then with admin and operating profit, obviously there isn't kind of as much to do here in terms of analysis. We've got the percentage change, could possibly look at it as a percentage of revenue, could look at personnel costs, average labour costs, because we've got the head office staff numbers. But admin again, number, reason. So personnel has gone up by this. So number, reason, pay rises, new head office recruit, percentage of revenue. And then there is some further analysis we can do on personnel because of the average labour costs. And it's actually lower. So maybe the new recruit is paid less than existing staff, for example. Same thing here, personnel, didn't get the other point, it wasn't on there, maybe it's backslashed here somewhere else. Premises, again, there's not really that much to say there. I didn't even do marketing. It was such a small amount and such a small change that there was just nothing to say other than it had gone up or down. Depreciation and amortization actually had a bigger impact, and that increases the percentage of revenue, which was having an impact there. But probably not as much. There could be more to say on admin. They could give kind of lots of reasons in here about additions and spending more money on capex. Like there could also be a section on cash in the exam, but it's that isn't the focus here. We're not told anything in the exam paper really about admin expenses other than the digital marketing specialist. So therefore, that's why I've commented on personnel, and also because I can calculate something interesting. But the others, there isn't really that much to say about. Again, as with cost of sales, just a point here, the number overall, and then an increase in all costs, an increase faster than revenue that has a negative impact on margins. So just the same as the overall cost of sale point, not going into the individual costs, high level comments, have all costs gone up, and are they increasing faster or slower than revenue? And therefore the impact that has on margin. And then operating profit, similar to gross profit, and let me say operating profit has increased. Again, a bit of opinion there, very slightly, by 7k. The margin has gone down. Why has that gone down? Gross profit margin gone up. Why has operating margin gone down? Well, personnel has increased as a percentage of revenue, as has depreciation and amortization. So you could say it's continued its worrying, declining trend. Not too worrying, not too much of a movement, but definitely kind of picking up on that. Had the profit margin increase, but the admin costs, some of them are increasing faster than revenue. Obviously, there's been the acquisitions in the previous year of capex, but then also personnel costs, and that's because of like the new recruits. You'd hope they'd be able to bring in some additional revenue in the future. But again, you can see here, maybe if you skip out a few costs, you might miss out on one. That was for overall cost of sales, which you mentioned. Here's operating profit, so mention that point, and then admin and operating profit. Nice easy numbers in this box. Here's the margin, and then the impact of the head office recruit or on a declining trend. mentioned EV impact. Yeah, when I did gross profits, my gross profit section did score quite well. Number, margin. They might both be in here backslashed, and then you might get some of the reasons or analysis in here, and then we've got another one here because of the EV impact as well. So you can see thorough, comprehensive analysis of the management accounts in exactly the way that I've demonstrated there, as I did in the technique classes as well. You can see here how we'd pick up all of the marks for that section, and we're in a really solid place going into the request for advice. And you can see here, scored really well here. Conclusions and recommendations relatively easy. So don't get too bogged down in a request for advice and thinking that it's lots and lots of marks and you need to score really well here. Absolutely want to attempt it. We want to get the easy marks, some of the medium marks, but don't sit here, for an excessive amount of time trying to perfect it, thinking that, wow, it must be, half of the question. It's not. It's never been worth more than 2 boxes. If you've been really thorough everywhere else, you've already scored very well. There's easy marks on conclusions and recommendations. There's plenty of easy marks in requirement 2 and 3. This is relatively hard. I don't think it's particularly difficult. There's nothing in this exam which is particularly difficult, but it's relatively hard compared to some of the other marks. There's lots of easy marks in requirements 2 and 3. So don't make the mistake of spending too long here to the detriment of requirement 2 and 3, because what you would essentially be doing is chasing relatively hard marks and giving up on easy marks. That's not being savvy. You want to make sure you grab the low hanging fruit, the easy marks. Nonetheless, not too difficult, and we've got a good technique here that you can use. So the request for advice, we're told it was aware of a potentially serious issue at the Woking garage. Now, we do actually know revenue has declined there. So potentially serious. Appears that RYC has been supplied with counterfeit alloy wheels. So fake parts. This was flagged quite a bit in the advanced information. So in May and June, so just right before the year end, several customers left online reviews complaining that alloy wheels fitted by the Woking garage scratched when they were cleaned. So it doesn't sound too serious in terms of consequences, doesn't sound life-threatening, but there possibly could be other issues with these wheels. When we contacted the manufacturer, they did not recognize the serial numbers and said they were probably fakes. One of the customers that complained directly to us was Quicksend. Quicksend's FD sent an email informing us that outstanding invoices will not be paid, quality of work has fallen below the required standard. And then we're actually told about revenue from Quicksend. We were told it's this amount and invoices of this amount remain unpaid. So we need to advise on the factors RYC should consider. So factors to consider when deciding how to deal with the issue, and then any actions. So we'll have some recommendations. Now, you could put the recommendations down with your other recommendations if you wish. Personally, I just have them here because as I go through each issue, I often think of a recommendation, I just put it straight here. And then I make sure I've got enough recommendations here for this issue. But as long as they're under a heading for recommendation, then it's absolutely fine. So what we're generally thinking about here is we're generally thinking about what do we know about the issue? Is there anything from the AI? So are there any kind of context points from the AI we can bring in and relate this issue to that? How significant is it? What impact does it have on the account? What impact does it have on the business overall? Reputation, impact on customers, etc. Is there any bias, perhaps? These are kind of useful lines to think across. And actually, in a way, it's not too dissimilar to the technique we use for requirements 2. It's almost like a mini issue that we have to deal with. But so what do we know from the AI? Well, we know that fake parts were a previously identified issue, and we know that there are supplier check-in processes. So these should have helped prevent the issue. And we've got the issue here of the fake parts, but actually we know there are processes and procedures in place at RYC which should help prevent this. We know that from the AI. It's a previously identified issue. There are these supplier check-in processes in place, So therefore, investigate whether the checks were sufficient or why they didn't identify this would be a good point. We can think about the significance. Okay, scratches on alloy wheels doesn't sound too serious, but there could be other issues, undiscovered issues. Could it actually damage the integrity of the wheel and cause a crash? So it could potentially be an impact on vehicle safety, and that could result in legal action against RYC, for example. So they need to identify the potential impact, any impact, financial impact on the accounts, or there could be other parts in inventory which require impairment. So identify if there are other fake parts, considering impairment, legal advice on the vehicle safety, etc. So that's kind of probably like the first issue around the complaints and the fakes. And then there's almost like this part which is specific to Quicksend. But we know Quicksend has been a customer since 22. We obviously know that from the AI. There's a whole exhibit on customers, and we know that, of course, that Quicksend is mentioned there. We also know as well that what revenue from Quicksend has been in recent years, predominantly from Woking as well. We know that Woking has declined in the year. So revenue is previously this. So we can see there's been a decline there as well. So it's been a customer since then. So there should be some goodwill which would help the negotiations. And we can see that revenue's declined, and that helps explain the decline at Woking. Actually, if you look at how much it's declined by, you can look at whether Woking would have declined without that. Would be a good point to mention. And then we know that there's unpaid invoices, and if we actually look at trade receivables, it's gone up by 18K, so it's gone up by this 12.4%, and that's because of these disputed invoices. So that's kind of like the impact on the accounts, that's kind of the impact on the business, that's an important customer. And then, of course, they're getting these negative reviews, so it's crucial to get the matter resolved urgently. This is a real business impact here. So you can see kind of short, concise range of points, thinking about like the issue on the business, reputation, impact on staff or customers, depending on what it is, impact on the accounts, impairments, impact on cash, etc. And at any points we can link it back to in the AI, and then lots of just sensible recommendations there. Not paying the supplier or getting the money back from the supplier, etc. Legal advice. So it probably is the more difficult part. It's less predictable. It's a bit kind of, you have to think on your feet, a little bit more. But you can see if you think across those lines that I've just said, and you use the exam paper, you should be able to generate some points there. If you can link it back to elsewhere, what's happened in the accounts, you'll be able to pick up a good few points there, as I have done. And therefore, probably picked up most of these points here. But even if you only get, say half of the points here, that's fine. I think the bulk of the marks here, and the part the students are probably most comfortable with, is the financial analysis, and make sure that's really good, and to kind of do your best here on the request for advice. Now, definitely make sure you attempt it. Don't just think, I'll just do the management accounts and move on, because there's plenty of easy marks in here that you'll get marks for. And then you need some of the points, because you get a mark in conclusions just for bringing any kind of valid point through, and then that feeds into the exec summary. So definitely attempt it, but don't spend an excessive amount of time trying to perfect it. So then, as we discussed in the technique class, conclusions, you just need to make sure you conclude on every section. So personally, I like to just go back to the main body of the requirement and just think, have I covered everything that we were asked for? And we will have done, because I use this to drive my report headings. My report headings are this: revenue, cost of sales and gross profit, merged because one feeds into the other. Admin and operating profit merged because one feeds into the other. But you see, I've got a heading for each of these and the request for advice. And then I've used the other information for my reasons why. So I've already got that, here. I've already structured it based on the requirement wording. So then in your conclusions, you just need a point on each of those things. So you just need a point on each of these. So I just take the main point from each section. So from my revenue section, the main point for overall revenue is that it's gone up, and then I've just taken one of my points. I'm not going to copy the whole revenue section because then it isn't a conclusion. It's just a copy and paste of the main body of the report. I've just taken the main kind of headline point for overall revenue. And then the same for each of the garages. So for Guildford, the main point, the number, with the reason, Camberley, the main point with the reason, etc. So I've gone through all of them there. And then the same with cost of sales, the main headline number, and then, by category as well. And then, gross profit. So I've kind of got it overall with the margin, but I haven't copied all of my, sections here, just the main points. So you can see my conclusions are nice and short. And I've got, revenue, by garage, cost of sales, a few comments by cost category, gross profit, including some comments in there by garage, admin, operating profit, and then the request for advice issue. So you can see I've just taken the main headline point from each section. So I've got a point in there on everything that was asked for in the requirement wording. But none of the detailed analysis, none of the interesting points around, some of that more detailed KPI analysis by garage that I had, not lots of kind of the profit analysis that I had. So it's a very kind of simplified, bare facts approach to it to keep the conclusions nice and short. And then that serves well as a base for my exec summary, which we'll come to in a minute. So conclusions are easy marks. So very important that you get your conclusions done in full. You see how much easier those marks are compared to the request for advice. And then the recommendations, we've got plenty of ideas on the report pro forma here, but focus on the ones, and the ones you can think of as well, that are most relevant to what's happened in the year. So investigate if there's been a particular KPI or a particular garage that's had a poor performance, then investigate why. If there's one garage that's done well, suggest implementing those practices at other garages. Now, if suppliers have increased their price, negotiate higher discounts. If there's been an issue with one of the KPIs, then maybe link the bonus to that because it's linked to utilization at the moment. Maybe link it to customer satisfaction because that has gone down. And then suggestions like offer mobile services, invest in more EV equipment, open new garages are all good suggestions to do. Maybe redeploy staff from Camberley that's performing poorly. So again, these are the ones based on the main things which have happened in the year. Obviously, KPI 3's declined, Camberley's declined. So therefore, they've kind of focused in and around that. And you always get one for your own recommendations. So hopefully you can get a few of the others. So then for the exec summary, like I said, if we're required to summarize what's happened in the year, that's going to be very similar to concluding on what's happened during the year. So, it's a fact that revenue's gone up by 3.9%. That's a pure simple fact. So that will be the same in the conclusions and in the exec summary. So when you kind of got the raw facts in the conclusion, you can copy that into the exec summary as your starting point. Even if we rewrote this, it would sound the same. So summarizing on something and concluding on it are a very similar process. So as your starting point for your exec summary, you can copy your conclusions in. So you have the raw facts. So this is all the unhighlighted text that, overall revenue has gone up by this. And then we've got the simple numbers for each garage, the simple numbers for kind of cost of sales, just saying what the headline numbers were and a brief reason why, because that needs to be in the conclusion, and it also of course needs to be in the summary. The director reading this needs to know those key headline numbers. So that will be the same in the conclusions and in the exec summary. And of course, you've seen if I have abbreviated something further on in the report, this is the first place it's mentioned. So therefore, I've written it in full and defined it there. They didn't abbreviate these in the AI as G, C, W, etc. I did that, so I'm just clarifying that here. But if there is an abbreviation that they use in the AI, for example, RYC, then it's fine to just use RYC. You don't need to write it out in full the first time it's mentioned. And similarly, things like GPM don't need to be written out in full. Commonly used accounting terms don't need to be as well. So you can see I've done that there. But other than that, the unhighlighted text is just exactly the same as the conclusions. It's got the raw numbers for each of the sections we were asked to comment on. Then the real skill in the exec summary, because you'll see here in these points are just the same as the conclusion. So having the key headline numbers, some nice easy marks there. So, revenue, cost of sales, gross profit, admin operating profit, and the request for advice. So that's the same there. So you'll kind of get those points. They're just factual points. How much revenue moved by, how much profit moved by, with a brief reason why. The real skill in the exec summary is deciding which other additional points from your analysis you bring into the exec summary. So points which weren't in the conclusions that you're bringing in. That's really where the skill is here. So thinking, okay, overall revenue, I've in my exec summary, I've just got the raw number here. It's gone up by this. Which other point should I add in to bring to the attention of the directors? So remember that the directors, obviously senior employees concerned about strategy, overall performance, are interested in like the big picture issues for the business. So, for example, we could be thinking of here, is there a particular garage that's doing well, a particular work type that's doing well or poorly, so they know to take action on it? For example, like Camberley. Have there been any significant changes in the KPIs, which obviously they're key performance metrics for the business? Significant changes in profit margins, as opposed to other costs went up by 5%. They're a tiny cost. They haven't changed as a percentage of revenue. That isn't something that the directors are particularly concerned about. It's not having a significant impact on the business overall. So you can see here in my revenue section, I've added in some points about the KPIs. So I've kind of added in those further analysis I did to identify what was driving growth. Well, an increase in average revenue per visit. There was actually a decline in visitor numbers, number of visits. I've added in the KPIs because, some of them have decreased, which is concerning. EV, it isn't strictly a KPI, but it effectively is one, is what they've said in the AI. So added in the change in EV revenue as well, because that's an important part of their strategy. So hopefully you can see why these are the big issues affecting the business, and therefore why I've added those points in. I've added an additional point in on Camberley because that's a particularly poor performing area of the business that they might want to take action on. And then conversely, I've flagged which garage is doing particularly well. So Red Hill is the fastest growing and has the highest KPI 2 and 3. Particularly as one of my recommendations is, implement practices there at other garages. So hopefully you can see here, I've started with the conclusions that the raw facts, the numbers have gone up or down with the reason, but then I've selectively chosen some other points from my main body of my report to bring into the exec summary. These points were not in the conclusions, but I've brought them into the exec summary. There's nothing new. I don't put anything in the exec summary which isn't in the main body of the report. You can't do that. Anything in the exec summary has to be in the main body of the report. So you shouldn't write anything new. But what I've done is selectively decided what to include in the exec summary. So this is what's in the conclusions. So think of the exec summary as conclusions plus, and those plus bits is where the skill comes in. You decide which additional points in your main body you're bringing in, because conclusions just had the raw number. So then again, with cost of sales, I've added in labour costs, average labour costs. That's quite an interesting metric. And then with gross profit, I've added in a bit more of my gross profit margin analysis, and I've added in an additional point on the request for advice. So the reason this is a skill is because if you've kept your conclusions nice and concise, you've got some room to add in some additional points, but you can't add in too much, otherwise you won't get this appropriate summary of report section. And the exec summary, as the name implies, should be a summary. You shouldn't put in too many points here. And some people think, well, if I just, dump in lots of points, or possibly even my whole requirement 1, then I'm going to get these specific points that they want in the exec summary. well, you'd lose the appropriate summary of report section and you're going to create a really bad impression on the examiner overall. So absolutely do not do that. Keep your conclusions nice and concise. You can then use that as a base for your exec summary, and then you can selectively add in some additional points, showing that skill, showing that judgment of which further analysis is particularly interesting that you want to bring to the attention of the directors, like I have done here. Probably one of the hardest things to do in the case study exam, showing that judgment, and therefore hopefully we've got the points that the examiner was looking for, that links the KPI to the bonus or some comments on the KPIs, for example. We've got that there. And quite often now it's some specific recommendations that they want. So again, I haven't copied all my recommendations. I've just, if you've got 10, for example, in the main body, then presumably you could have kind of 6 or 7 would be a summary. If you're conservative, maybe just go for 4 or 5. Invest in EV would be like a particular recommendation that was on the exec summary here. But you can see further analysis, taking action on Cambly, and that's a recommendation, but also kind of further analysis, commenting on the poor performance there. But this is difficult. It's difficult to get the specific points in the exec summary. So even if you didn't get them, you can see as long as you've kind of got the main headline numbers and you don't make it too long, you should get at least half of the marks in the exec summary. Particularly because, following this report structure and being tactful and ethical will get you these 2 as well. So this is the harder part. So I would say the hardest parts in requirement 1, the request for advice, and getting the additional points in the exec summary. But if you follow my approach, then there's no reason why you can't get those marks at all. And look, you can kind of see here, I didn't go through and highlight all the points here, but I did certainly get most of them. You can see, this answer is, scoring close to 100%. So, even if you aren't getting some of the points, then, don't be too hard on yourself. You just need to go through and making sure that you're kind of getting, 60 to 70%. So you've kind of got some margin for error on exam day. But hopefully you can see there isn't anything that's too hard. There isn't anything on here that, you'd be looking at thinking, oh, there's absolutely no way that I can't do that. This isn't like taking the deferred tax entries on share-based payments to equity, in the CR exam, or some of the anti-avoidance rules for corporation tax in BPT. This isn't like mind-blowing stuff. This is, fairly standard, fairly bread and butter, kind of like business strategy type work. But there is a certain skill and technique to use to make sure that you hit all of the points in the boxes, and very much exam technique based in terms of developing your speed to get through the appendix, and then practicing this technique of using the exam paper information, undertaking the detailed analysis on the accounts, really understanding the business and kind of weaving it all together. But you'll get plenty more practice of this in the other mock exams, and when we also debrief those as well, I'll be giving you plenty more advice on how to do that and how to keep developing your exam technique so that you will be able to produce something like this in the exam, and possibly even score a prize-winning mark. But it all very much comes down to you developing your understanding of this technique, practicing. And if you do that, there really is no limit to how well you can do. But requirement 1, very much standard, very much predictable. So very much about developing your technique and do it as quickly as possible so you can move on to requirement 2 and 3 with sufficient time.